Hello there and welcome to Core Finance, where I'm joined by Alessio Rustani from leadingtrader.com. How are you today, Alessio?
Thanks for having me. First show, Core Finance.
It's a name to remember.
It's great to be here.
It's a name we can't forget. Let's go on to the slides you brought in. It's gold. And is there any hope here?
Well, there could be. I mean, look, the fact is there's major support below us on gold between 1200, a magic number on gold, and 1190. For folks who may not know why 1200 is a magic number for gold, is because that's the production cost to produce 1 ounce of gold is $1,200. So I basically think, look, 1190 is going to be a major support. I think we're going to head down to that level, potentially. That's also the 61.8% Fibonacci retracement on gold. I think wave 3 potentially will end there and then look for a bounce or rally. You could trade that bounce if you want from 1190 to 1200. That should be a wave 4 correction. But I think we'll have another retest of that level, wave 5. But bottom line is, look, gold is becoming oversold. We should be able to see some kind of bounce here. I'm not looking for a major rally in gold all the way back to 1300, just to trade the bounce here on this market.
Okay.
Finally, I think you said that you quite like this chart on JCPenney.
Yeah, it just looks like, well, I mean, it's one of those things that you're in such a sort of tight range now.
That's right.
At the bottom of the triangle.
That's right.
But, you know, whether you're right or wrong, you buy and you get stopped out or whatever, you're risking so little in order to potentially get a coiled spring effect on that. I mean, the only thing that worries me is obviously, as you were saying before, about retailers.
That's right.
The traditional retailers are getting slapped down.
Well, exactly. For folks in the UK who may not have heard of JCPenney, although I think it's unlikely, I think it's a famous name, but JCPenney is one of the major retailers in America. I'll be honest with you, I don't really like their shop that much, but it's okay. But the bottom line is that a lot of these retailers in America, and probably in this country too, JCPenney, Macy's, they're all suffering. I mean, just recently the shares of Abercrombie & Fitch dropped quite significantly. And the reason is that these retailers are not catching up with the new way people are shopping these days. People are now shopping online, as you mentioned, I think earlier was Amazon. People are buying their stuff online nowadays. But the fact is that these retailers like JCPenney, Macy's, Abercrombie & Fitch, they're not catching up with this new technology, and they have to do something soon. So we go back to that chart, guys. I think there could be an opportunity here to buy JCPenney. This is a stock that's fallen. It used to be trading at 80 bucks. Some years ago, it was 80 bucks a share. Now it's what? It's $5. So look, there's a good potential for risk return here, good risk return. The sentiment, as you can see, the dumb money sentiment, courtesy of Jason Gepper there, has reached extremely negative. So people, the general public, have become extremely negative on retailers, especially JCPenney like this one. But I agree with you, Zach. I think that, look, this wave 5 potentially is coming to an end. I'm going to see some consolidation here. I would need to see a close above $5, a strong close above that wedge, pennant formation above $5. We get some bullish divergence there as well. But then I would look to establish a small position to get long and just build that position. Any views on that?
Yeah, I mean, I think the only thing is obviously the trend is so negative there that, if you got $1 or $1.50, you'd say, thank you very much, I'm off. So I think that's you wouldn't want to push your luck too much on this one.
That's right. And you could put a stop loss just beneath $4 to have some risk control.
Alessio Rustani from leadingtrader.com, thank you very much for coming in today.
Thank you.